How's it, guys? Welcome back to FX Rhapsody. Today we're going to be doing analysis on two currency pairs again. It's going to be the Euro USD dollar and the British pound USD dollar. We're going to be using the COT reports on the analysis, and so just go visit my website on the bottom left corner. Then you can download the COT reports for free. It's under the resource tab on the website. There's also some nice video categories if you just scroll down on the homepage, especially for those of you that's starting out on trading. I've got some nice categories there that you can watch, and I'll tell you all about the trading. And for those of you that's, a little bit more advanced into trading, there's some nice strategies and so forth on my website. Go visit my brokers tab. Look at my preferred brokers. Those guys are brilliant. Definitely worthwhile looking at them, especially when they're A-book brokers. So yes, just go visit my website. So let us hit the charts. We're going to start off with the Euro USD dollar. We're also going to be looking at the monthly time frame. First, we're doing top-down analysis. Usually I do from daily down to hourly, but today we're looking at the monthly. What can we see on the monthly time frame? We can see that price is still tapping this bottom big area of support that we're going to be looking at. We can see that there is still some liquidity intact, meaning that this area of the market is still not being tapped into. So we have some liquidity that's lying at the bottom over here. Buy side, sell side liquidity, basically buying guys that's been buying up, leaving their stop orders at the bottom, especially on this side over here. Price coming down, retesting this area. So now it's just a case of, what is price going to do? Is it going to respect that area again and start moving up? Or is it going to break through this area eventually? Looking down to the daily time frame, what can we see? Okay. On the daily time frame, again, we're just looking at a closer view on this area that's been respected in the market. As you can see, that the area has not been broken, or liquidity has not been tapped into it. Price came close again, hitting that area for a third time. First, second, third time on the daily time frame. Usually when it's on the third time, we are looking at price going up again. We also see a nice retracement that happened. For those of you that caught that, we had a break in structure. When price went up, price was consolidating at the top here. We had a nice break in structure. Where's my line? We had a nice break in structure over here, creating a fair value gap in the market. It's a imbalance, price retracing back to that area again. And then if you were in a sell area, you could have had some nice little pips. That's about 200 odd pips that you could have sold down. Let's move to the 4-hour time frame and see what is happening here. 4-hour time frame, a couple of things. So what we had on a 4-hour time frame and what we still have is we have still got this area on the top here. What we can see previously, what happened was, this was our previous high, price came down, liquidity, let me just zoom in so you can see clearly, liquidity tapped, or price action tapped into liquidity with that candle, and then price went down. So that created another high in the market. And as you can see, price again made its move, and it went and tapped that liquidity area once again before it started heading down to the downside. We also had this nice break of structure, excuse me, which happened with this long bearish candle. And then, as we know that, this is just the opportunities that you could have caught this week. That is a closer view on that imbalance in the market, that fair value gap was created, price retracing back to that area. And again, if you were in a sell area there, you could have caught a nice little, basically a 100 pip move if you did not catch it on the daily time frame. We also have another area of interest, another imbalance in the market right around there. Okay. And lots of times price action draws towards those areas. Okay, so that is going to be a potential buy area up, price will be drawing to that area, but again, we will have to look and see on the low time frames what's going to happen. Let us move to the hourly. Just going to take this area out. So on an hourly time frame, what we're looking at is price moving down. As we can see, this is our previous high at the top. Price moving down all the way, creating this double bottom basically. And this is again that area. As we can see, liquidity was tapped. Okay. But liquidity was taking out with all these areas. So price retracing up, going back again. So what happened was price tapped liquidity right around there, and that is basically when structure turns. Price coming down again, hitting some more liquidity at the bottom. So for me, it's just building up momentum for a possible move to the upside. If you look at these areas, I'm going to just highlight some areas of interest for me. That is a nice area where price might get drawn to, a nice imbalance in the market. So we're looking at first price hitting that, and that is again just above this high. Okay, so that is going to be a very good area to look at. We're obviously looking at this excuse me, I'm just gonna, where's my chart, doesn't want to move, there we go. So that is going to be an area to look out for. I'm highlighting this low over here as well. Okay, this is another area. So basically we can see price going in between these two highs and lows in the market. And then I also am highlighting out an imbalance in the market up here. Okay, so those are my areas that I'm going to be looking at on an hourly time frame on the euro. So I'll be highlighting, or those areas being highlighted in the market, and I am, you know, most of the time price action draws towards these imbalances in the market and goes and tap into that. So we're going to be looking at placing some nice buys, looking up in that area. Let's look at the COT reports and see what price is doing there, what the big banks and institutes are doing with the euro. As we can see, huge amounts of, you know, a big bearish movement in the market that is related to all these buys that's being, all the long positions being closed in the market, lots of shorts being opened. So now you can start seeing a little bit of a shift, especially when price is hitting that bottom. You know, more longs being closed in the market, but a lot more shorts, especially now the last week. So you can see that from a 50,000 net position went into the -6, -15, -10. So you see that starting to shift in the market, and that might relate to this little up movement that we're going to see hopefully this week. So we're going to be looking at these two areas in the market. Any break of structure on these, looking for some gaps, but price getting drawn into those areas. So let us go to the next currency pair, which will be not that one, but this one. British pound, US dollar. We're going to be also starting on the monthly time frame today. Monthly time frame on both currency pairs, both the euro and the British pound, very similar. Okay, what we can see is this bottom that is still intact. It's a very huge area in the market. Okay, so we can see price retracing, breaking through that, you know, hitting some liquidity, coming up, hitting that area again. We still see that there's some liquidity that's intact over here. So we want to see price moving up and hitting that liquidity, or there's a possibility that price is going to carry on to the downside. Anything is possible. So let's have a look at what the daily time frame tells us. So on the daily time frame, there we go. Just going to zoom in a little bit more. So on the daily time frame, what we can see is I have done analysis on this before. So we had this previous high, price hitting that area, tapping into that liquidity, then moving down to the downside. Then obviously we had that low, and as you can see, price tapping that area, going into the liquidity. This is my previous analysis on this pair. If you didn't watch it, the link will be in the description. So what happened was price created this imbalance in the market on a daily time frame when it broke that area over there. Let me just have this. So we had a break structure over that side. So price hovering over here, pushing down with this big bearish candle, then price coming up, and then price action gets drawn into that area. And this is the area that you could have had some nice sell opportunity. And this was at about, you know, almost 380 pips down if you had to sell that area. So just always look at those areas, guys. It works on any time frame. So don't be scared to go back into your charts and to see what it does. So we have that price going, and let me just highlight that again. So again, imbalance in the market, price getting drawn to it, and that's a sell opportunity over there. There's also another method or another way that you could have sold that, and I will show you that on the 4-hour time frame. 4-hour time frame. Just zoom out a little bit so we can have it a bit more. Okay. So basically that imbalance in the market, as you can see, there is some imbalance over here as well, fair value gap. Okay, but on a 4-hourly time frame, it did not hit that area. But if you had taken your Fibonacci out from that high, this is the high on the daily as well, and that's the low on the daily. Okay, so we had that swing high, and then we had this swing low, price retracing all the way to the 62% area. Look at that, just tapping into that. So minimal drawdown if you had to use your Fibonacci moving to the 62%. Minimal meaning, I mean, you place your trade once price hits that area. Okay, yes, your stop loss would have been a lot bigger. Okay, but I mean, I'm just gonna look at this. Look at that drawdown. Not even 16 pips or so. Okay, and the amount of pips would have been 400 pips if you had taken this with a Fibonacci. Okay, so always look out for not just those imbalances in the market, but use your Fibonacci tool. It's definitely, you know, a very powerful tool to use. British pound on the hourly time frame. Not a lot of gaps being formed, not a lot of imbalance in the market being formed, but I'm definitely going to be looking out for 2 areas in the market. This will be your previous high that I'm going to be watching. Okay, I'm looking at that high, and I'm going to be looking at this low, keeping that on the chart and see what price will be doing when it hits that area, how it's going to react to that area. You know, be it if price goes up, you know, will it bounce off that? Will it do something like this? Or will it just carry on to the upside? Okay, will it break that area, make a little bit of a imbalance in the market with a little bit of retracement and then carry on to the upside? Or will it just carry on downwards and then breaking that area in the market? So we have got lots of opportunities to see what price is going to be doing in these areas. It always respects these type of areas. Okay, if we are looking at some sell opportunities, maybe not saying it's going to be a sell, but again, you need to always have all these little informations intact. So we have a swing high over here, swing low, price almost hitting that 62%, and it wants to look like it's going to turn. But again, drill down to your lower time frames, guys. Okay, this is always important. Don't just stick to higher time frames, especially when it comes to entries. You know, look for nice, more sniper type of entry on your lower time frames, even drilling down to the 5-minute or the 1 minute. Okay, so that's all from my side. I hope you enjoyed this analysis. If you did, don't forget to hit that like button, subscribe to my channel, hit that notification bell. There will definitely be some more analysis coming to you this weekend. Guys, I hope you are staying safe and happy trading, guys.